Good morning, ladies and gentlemen. I think first and foremost, let me apologize for starting late. I think we're a couple of minutes late, but we will catch up as we go along. So good morning. My name is Wale Oshin, and I'm the chairman of the Nigerian-British Chamber of Commerce Programs Committee. I'm pleased to welcome you all to the first edition of the Next Generation series, themed Pacemakers in the Tech Sector. I'm particularly delighted to see our council members and exco members, our distinguished speakers, and all our esteemed guests. Please rise as we observe the national anthem of Nigeria and Britain. Thank you very much. You may be seated. Before we begin, please allow me to state some housekeeping guidelines. For our physical attendees, please wear your face mask at all times. Sanitizers are available on each table. Questions will be answered during the Q&A session. Please raise your hands and a microphone will be brought to you. For those joining us virtually, if the volume is too low, kindly check your system volume. The event is being recorded and will be available live on our YouTube channel, Nigerian-British Chamber of Commerce, NBCC. To comment and have discussions, use the chat icon. Submit your questions via the Q&A. Only this will be answered during the question and answer session. Thank you for listening. Please join me as we welcome our President and Chairman of Council, ably represented by our Deputy President, Mr. Ray Atley.
I want to say good morning, standing on all existing protocols, but the patron, I think Sadelegon has to recognize. We are happy you are here with us. And to those who are with us online, we hope that you pardon us that we are starting just a little bit late. And so we go to the business of the day. Good morning once again, all council members that are present and other members that are here, including members of the press that we have invited. It is my pleasure on behalf of the President and Chairman of Council, Mr. Adeyemi, to welcome you to this edition of our Next Generation series, which we have themed Pacemakers in the tech sector. I'm particularly delighted to welcome first-time visitors to our ultra-modern multipurpose plaza where we are now, and invite you to take a tour of the facilities, which includes the multipurpose hall, which is this room, training room. We have a seminar room, we have meeting rooms, and the British Street Center, as well as our business incubator for our young people. And you get to hear about that later. Let us also quickly introduce the NBCC. It's very important that, especially for those who are non-members and those non-members who are with us online, that you get to know about us. The chamber was set up in 1977 to promote trade and investment between Nigeria and Britain. And the chamber currently has over 400 members from diverse sectors of the economy. We are an international affiliate of the British Chamber of Commerce, BCC, which gives us access to a network of 53 chambers of commerce across the United Kingdom and 71 other international affiliates around the world. According to the Center for Global Development, Information, Communications and Technology sector, the tech sector, is one of the fastest growing in Nigeria. Despite COVID-19 pandemic, the sector in 2020 contributed 15% of the country's gross domestic product, second only to agriculture. This trend continued over the last 5 years, with the sector growing at an average of 18% between 2016 and 2019. This growth has positioned Nigeria as the largest tech market on the African continent, with numerous tech hubs and a growing, vibrant customer base. Over 180 million people now have access to a mobile telephone, and internet penetration is projected at 65% in 2025, up from 2% in the year 2001. The sector has grown and has made a significant impact, both in Nigeria and around the globe. Today, we are honored to have in our midst tech experts and professionals who have distinguished themselves in the tech space as they share with us insights on how we can explore the sector further and thus maximizing the benefits for the collective good of the sector, the stakeholders in the sector, as well as beneficiaries across the country at large. All over the world, there is a growing demand for African developers, according to Google. We therefore need to redouble our efforts to train our people so that the next generation of tech experts from Nigeria will be world beaters. I'm sure we are going to hear more of that from the panelists when they speak. I am delighted to welcome our speakers. First, I want to introduce Mr. Adetayo Bamiduro, if he's here already. Mr. Bamiduro is the co-founder and CEO of Max Africa, Africa's largest vehicle subscription and electric vehicle platform for commercial drivers. Before co-founding Max, Adetayo had roles including software engineer, product manager, and management consultant at PwC, Delberg, and NLNG. Adetayo has been awarded the Alibaba E-Founders Fellowship, MIT Legatum Fellowship, and the World Economic Forum's Inclusive Growth Award. Adetayo holds an MBA from MIT. Next, I want to introduce, in no particular order, Mr. Collins Onwebu, founder and executive chairman of Signal Alliance. He is the founder of Signal Alliance Technology Holding, a leading Nigerian technology company where he's currently the chairman. Collins has a Bachelor's of Engineering degree in electronics engineering from the University of Nigeria, Nsukka. He is an alumnus of Harvard Business School, Lagos Business School, and Said Oxford Business School. He successfully transitioned Signal Alliance to a holding company now called Signal Alliance Technology Holding, a diversified technology company with 3 major subsidiaries, which offer services in the area of enterprise technology, software platforms, and applications for large Nigerian enterprises. Collins was nominated as an Ernst & Young Entrepreneur of the Year 2013 for West Africa. He is a recipient of Recognition Award for Selfless Service by the EDC Lagos. He serves on the board of the Lagos Angel Network, GEN Nigeria, member of Business Day Editorial Board, Harvard Business School Association of Nigeria. He's also a member of the Nigerian Computer Society and the Institute of Directors, IOD. He's an entrepreneur in resident at the EDC Lagos. Next, once again, in no particular order, the only lady on the list, Sholakbe Akinpelu, CEO Harvest, is a certified financial education instructor and a member of the Personal Finance Speakers Association, USA. Sholakbe is founder, Harvest, a women-focused and inclusive fintech platform for the underserved and excluded women in Africa. Harvest enables women to participate in savings, impact investments, and credit, particularly for smallholder women farmers in Nigeria. As a financial feminist, I wonder what that is. Sholakbe is pro SDG 5 and SDG 10, who believes in achieving gender equality and reducing inequality through financial literacy, technology, and access to capital. For over 12 years, she worked with various top Nigerian financial brands, including Sky Bank, Sterling Bank, Wema Bank, Leadway Assurance, and FCMB, where before waltzing to the client side of communications at Meristem, a leading investment firm, as the head of corporate and marketing communications. Sholakbe is the Nigeria chapter director of Women in Tech Global, an international organization with a double mission to close the gender gap and to help women embrace technology. Women in Tech Global is present in over 100 countries with over 70,000 members. Last on the list of our panelists, we have Mr. Itop Ipe. He's the CEO of AutoCheck Africa, a seasoned entrepreneur that has been at the forefront of increasing access through mobility, financing, and digitizing the auto loans process by leveraging technology, data, knowledge, and experience. Apart from auto financing, AutoCheck focuses on solutions that improve quality, maintenance, and after-sales access. This enables car buyers and sellers to access convenient and innovative mobility solutions in Africa. He previously served as the CEO at Cars 45, an innovative platform. Under his leadership, the company expanded into 2 other African countries, Ghana and Kenya. Before then, he was the CEO at Deal Day, touted as Nigeria's largest discount store. Itop also served as commercial director at Kunga.com, one of Nigeria's largest e-commerce platforms. AutoCheck, Itop's latest venture, was founded in 2020, and he has overseen the company's rapid expansion across 6 African countries. Nigeria, Ghana, Uganda, Kenya, Cote d'Ivoire, and Morocco, and has vast experience with successful acquisitions, startup funding, and bootstrapping. ETOP is highly enthusiastic about creating wealth and supporting the development of young people across Africa, especially in the tech industry. Yes, I'll soon be done. Our moderator today is Mr. Segun Akintimi, our own, that is, who is currently the MD CEO of Page International Financial Services Limited, with almost 30 years experience in the banking financial services industry. He's spent 15 years out of this number in senior management and executive positions. He was exemplary and has remained exemplary in leadership and in the way he handles business process transformation. These are skills that he acquired over the years. And I can say that at various times while he was at Skybank, he was responsible at some point for the businesses of the bank across West Africa, and particularly positioned the bank as one of the most technologically advanced financial institution in the country. He was a director on the board of Law Union and ROC, and is presently a member of the board of HIS, the largest tour company in Nigeria, and DKB Markets, the leading FX trading company. He also led the team that founded Rent Money Microfinance Bank, which is one of the leading consumer finance institutions in the country. He holds a first degree in computer science from the University of Lagos and an MBA from the prestigious Lagos Business School, an alumnus of INSEAD Business School in France, Wharton Business School in the University of Pennsylvania, and has attended several senior management courses. He's a member of the IOD and an honorary senior member of the Chartered Institute of Bankers. I thank our sponsors, Africa Prudential, Max Africa, and Custodian Group for their support. I also want to thank the programs committee for putting this together. And I want to thank you listening at this point, and I wish you fruitful deliberations as we listen to our pacemakers this morning guide us through the opportunities that abound in the tech sector. Thank you.
Good morning, distinguished ladies and gentlemen. And I'd say it's a big and a great pleasure to be here. This is the first in the series of the next generation discussions we'll be having coming from the chambers. And today, the theme is pacemakers in the tech sector. I'd say we're all pace. Anybody using any form of technology is a pacemaker. But again, what we want to focus on is what even drives the need for the tech that we use and where the growth path is, where the opportunities are. If you go down memory lane, 20 years ago, you'd find the top 10, top 20, top 30 institutions on the New York Stock Exchange, probably the likes of Coca-Cola, General Motors, and the likes. But today, the top 5 are probably tech companies, the likes of Facebook, Google, Alphabet, all the other companies. So things have evolved so quickly. And the question is, how do we position ourselves? So today we have, as introduced by the Deputy President of the Chamber, our guest speakers, and I'd like to invite them in this order. If they could please just rise and come to the seats here. Mr. Adetayo Bamidro, the CEO, co-founder of Max Africa. Could you please clap for him? Thank you very much. Mr. Collins Onwegbu, the founder and executive vice chairman of Signal Alliance. Mr. Itok Igbe, the CEO of AutoCheck Africa. He's not here yet, but I believe he will join us shortly. And this is no particular order, so it's not about being a feminist or a, what do they call? Mrs. Shalakwe Akipelu, the CEO of Harvest. Oh, okay. You sit down. Thank you very much. And I would also now take my seat as we commence discussion. I think if we look at the topic, which is pacemakers in the tech sector, the starting point is where or how have we perceived technology itself as an industry, as a sector, and even in Nigeria of today? How do we perceive technology? Very, very brief words. I think that would be a good starting point. So can we start with you, Mr. Akiku? Yes, please.
All right, good morning, everyone. I'm very excited to be here. I look forward to having an engaging conversation. So to your question, how do we perceive technology in Nigeria? I think it's, I don't think the answer to that is different from, almost any other country in the world, maybe except North Korea, but it's the same thing, which is that it's disrupting the way we live. Fundamentally, what technology is doing, and of course in Nigeria and other countries, is it's enabling distribution at a scale like we have never seen before. It's enabling access at a scale as we have never seen before. And it's also reducing costs. So previously, if we needed to distribute products or deliver access to people in other places, there were a lot of costs involved in that because you typically had to hire people, set up physical stores and all of that, or physical units for people to access those services. But what's happened today is on people's smartphones, we can deliver those services to them. So back in the day where maybe the concept of building a bank meant you had to set up 500 branches around the country, which in itself is very expensive, very complex. You have to talk to real estate agents, you have to get permits, building permits, and all that. Today, you can literally have zero physical location, right? And still be able to deliver banking or credit or financial services to people across the entire country. And that is the power of technology. So it's reducing costs, it's enabling distribution at a very large scale. And it's also, especially my generation and, those coming behind Gen Z, and I think there's Gen Alpha now, is it's leveling the playing field. Because if you think about it, as in most countries, and Nigeria is not an exception, but Nigeria is even probably worse, where the Gini coefficient is even higher. What that means is the gap between the rich and the poor is much higher. And, stats have it that 95% of the wealth in the country is concentrated in the hands of people 55 or 60 and above. So 0 to 50, right, spending change, right? You don't have much money. So there's no chance we can compete or we can get into the game, unless there's leverage. And that technology is the leverage.
I like that. Thank you very much. Now let's hear from someone probably a generation higher than you. Maybe Collins will be able to help those of us that are.
Because don't make me feel too old. Well, good morning, everybody. Nice to be here. I've always passed this building, but I've never entered it, so I'm happy to enter here today. How do we perceive technology? I think for me, it's still early days to start beating our chest about what technology has done in Nigeria. We've come a long way from where we started. I've been in the industry for about 30 years, and a lot has changed in the past 30 years, but a lot still needs to change because I want to look at technology from the point of view of, if you look at the industrial revolutions that have happened, but I just want to talk about something like electricity, for instance. When you walk into this building today, you assume there'll be light here, except that NEPA takes light once in a while. But normally you expect that there's light here. You don't see any NEPA manager in the building anymore. Now, if you go to telecoms also, those who were in offices 20 years ago, you couldn't do it without the person who managed your PABX. Because again, that PABX helps you communicate either internally or externally. I think that we're evolving to, technology is going through some kind of evolution where before it was something that was seen as an exotic thing. And we're getting to the point where everybody will assume that technology is just there. I mean, when you wake up in the morning today, you pick up your phone and check your WhatsApp. That's possibly the first thing most people, the people don't pray anymore, they pray with their WhatsApp. So we're getting to that point where you will be unconscious of technology. That's what is going to happen. So I suspect that in 20 years, nobody will be discussing what we're discussing now because technology would have gone in the background and we're talking about the next thing. But before we get there, what it will do to all of us, or what it has done to all of us, it has changed everything. And it's a natural evolution. I don't think we need to be, it's just going to happen the way it's going to happen because it makes our life easier. It makes the way we do things easier. But the challenge for Nigeria is to build the infrastructure that makes sure that when you consume technology, you're not aware you're consuming it. I think we're almost there in some parts of the world, but there's still a lot that needs to be done. How will we get to the point where when I wake up and I do banking, we call it fintech today, banking is still banking, but it's enabled by technology in such a way that when you do banking, there's no, you don't remember that there's a tech part of it. Or if you hire a taxi, you don't remember there's a tech part of it, but you just walk up somewhere and a taxi comes to you. And you did because it is enabled by tech. I think that's where we're evolving to. And it's important that a country like Nigeria, we build the infrastructure that allows us to do that. Because if we don't build that infrastructure, we'll continue to struggle. I know a lot of services are coming up now, fintech, logistic tech, health tech, but those things are delivered by fundamental critical infrastructure. I don't know whether anybody was aware that about 2 years ago, MTN and a few of the telecom companies said Nigeria should declare the telecom infrastructure as critical national infrastructure. So that if you cut a cable, they jail you. Now, if an MTN cable cuts somewhere in this neighborhood today, we all struggle here. Okay? So when we see all the services enabled by tech today, we have to think about what are the critical infrastructure that keeps them in place and make sure that Nigeria is evolving. So there's a lot of fancy thing about we're launching this product, we're launching this service, but underline that, and that's why possibly today MTN is the most expensive, most valued company on the stock exchange and Airtel, because they are part of that foundation that delivers all the things we see. So long as we are building that critical infrastructure, and it will take Nigeria a long time to get to a point where they become very pervasive. I would still say that for me, these are still early days, so there's a lot of way to go.
Thank you.
All right, thank you so much, and good morning, everyone. Without belaboring what my co-panelists have said, really brilliant points about how tech is collapsing repetitive tasks into simple processes, increasing efficiencies. I think, in addition, and I would just like to look at another perspective, which is experiential products, customer offerings. I would say that tech has really, really leveraged that opportunity across sectors. Before now, I know that a lot of businesses used to struggle, with personalization, with building experiential products, leveraging a lot. But with tech, especially in this fourth industrial revolution, we can play with a lot. There are almost no limits. When you look at big data, when you look at, just building around and for, the people we are solving for. Tech has really, really simplify that. For instance, okay, let me just use state a use case here. Someone signs up. The first time the person transacts, the person gets a notification. Hey, you just did your first transaction. The fourth time, the person gets another notification. Just because we are able to track this person's usage, we're able to build around that. We're able to build products based on the person's usage. I don't know if you understand. So it feels like this product or whatever it is built for me and is built with me in mind. And that is being powered by technology. So I would say that more than ever before, yes, they're absolutely right. We're in the nascent stages, but more than ever before, technology is accelerating building experiential products for humans and for users. Thank you so much.
Thank you very much. I'd let Itok catch his breath before we come to him. Now, one thing that, and going back to the topic here, we're talking about pace setters and technology. We would observe that in the last couple of years, there's been so much centered around fresh investments into the tech sector. And all of a sudden, Nigerian companies are becoming unicorns. We've witnessed what has happened with Flutterwave. We've seen, of course, the most recent one, I think, is Main One did, which was not in the payment sector, but it was in the infrastructural sector. So what that tells us is that it's not just about the fintechs, really, because tech is actually impacting on so many different areas. So with all these happenings, what would you say is a major driving force for development of technology relative to its impact point? It's a bit of a complex question, but
okay, I think maybe just take the last part of the question.
I said, what would you say, based on, of course, what has been happening in the industry in terms of investment, is the driving force of growth and its impact point?
Okay, well, I would put that to, first off, let me establish, and I've seen this and I've heard conversations. As Nigerians, we are a set of vibrant, energetic, and creative people. I think it's a DNA thing, right? So first, I want to establish that you can't miss that vibrancy, and wealth, as it is, it's maybe that's why we call it currency. You know, it recognizes energy, it recognizes value. So wherever you have a group of 200 million, well, depending on whoever is counting Nigerians, trust me, wealth will naturally flow in, right? And then, you know, with that wealth, we can build high growth, high impact businesses. And that's what we've seen in the past years, which is beautiful. I'm really proud. Anyway, I stand, I'm always happy to say, you know, even in the global community of women in tech, I joined less than a year, and I was just being a Nigerian, an efficient Nigerian, and things are standing out. Yeah. So I would say that is one. The second being, we have huge, huge challenges, infrastructural, you know, economic, and all of that. And with our creativity, I believe that we are the best solvers for these challenges. And so what that had done also is is just naturally pushing us, fusing us at that place where we identify our problems and solve them. Auto check is here, Max is here, transportation, you know, I mean, insurance, fintech. So there are just too many challenges to be solved for. And I would say that is another one. And of course, we have the others. Okay, so, but I'd just like to take a pause and mention that those numbers again, as you know, Mr. Bamduro mentioned earlier, when you look at those numbers, you want to look at the tilt of wealth, the separation. And so if it's okay to quote the numbers, but how many have disposable income, how many can afford what. So if you're solving for transportation, people would move regardless if they are below a dollar line or not, okay? So that also counts that in building this product, either we are building for people below a particular line and trying to move them upwardly forward, or building for people above the line who are at that, what's this Maslow's hierarchy of needs? Self-actualization, okay? There are just tons of opportunities to build around. And of course, we'll keep seeing this growth. We've not started. I said that we've not started. It keeps getting better.
First of all, apologies for my late coming. Had an unavoidable interference. Yeah. Well, I think it's just like Shalakba said. I think it's pretty straightforward. You have a large population, very limited opportunities for people. I think personally, as an entrepreneur using technology, I found that that's where I typically could have an advantage. You have a lot of people with limited networks, but typically technology allows you to really develop a meritocracy in terms of you identify a problem. There are lots of them. If you're an intelligent individual or you're able to have a lot of resolve, I think the country and the challenge is prepare people for that. And basically, if you can be innovative and typically develop a product that will solve people's problems, you then have a population that can actually consume and create wealth for an individual or a business that is looking to grow. I think if you look at the entertainment sector as well, it's very similar in terms of, if you kind of look at the structure around there, right? People sit in their studios, they create beats, there's internet to distribute this music, it gets circulated across the population, and that's how these stars are made, similar to movies as well. So I think technology follows that similar route where, and I think if you look at other similar economies where emerging markets that have these sort of challenges, you look at India, you look at China 15, 20 years ago, also similar as well. So I think it's a natural situation where large population, limited opportunities, technology then becomes an enabler for a youth population that have seemingly an advantage where sort of the traditional controllers of the economy might not have insight into those opportunities. So all of a sudden it gives you leverage to be able to create a product that gives you in some cases an unfair advantage. And if you're able to scale that and build your business then, and I think that's typically what is driving the innovation. It's just people wanting opportunities that are limited in a sense, so it creates wealth for them. And then, of course, when it comes to funding, you have a scenario whereby, I think if you look at the funding structure, it's not traditionally recognizing what you would call the way people would, or corporate sector would typically attract funds. So the way venture capital funding is structured is that it recognizes the limitations of young entrepreneurs. It recognizes the fact that they don't have a lot of knowledge around their financials and things like that, and also provides support in helping them scale their business. So in a stage where people that are funding are typically looking at primarily the idea, the intention, and the ability of that individual to execute, as against some of the other requirements there, right? So once they identify that, they typically would match that individual with the kind of support that will grow their business. So I think the funding structure also recognizes the limitations around those individuals that would probably historically be limited from accessing standardized corporate sources of funding.
That's interesting, because if we're talking about the funding structure, or of course in terms of value that is created and measurement of value, there's a company called CGI Insights, and they released some data last year about data of the investments. 1 out of every $5 invested by venture capitalists came into fintech. And in 2021 alone, about $135 billion came into fintech. So when you look at the monstrosity of this amount, it's probably even more than what is coming into a lot of the sectors. So you ask yourself, value created versus the investment. How do you relate that? Because I'll tell you, for prospective tech enthusiasts, that is a motivating factor. They build, I will say in quotes, supposed value, and they're able to flip it. So how do you relate the value created to the investment that is going on? And don't forget, the figures, the $135 billion for last year is probably going to double or quadruple this year. Because what has happened is that in the last 2 years, post-COVID, COVID has created fresh opportunities. And we don't know what the next COVID will be. And there's definitely going to be another COVID. So what are our thoughts around this?
So I think it's fundamentally, so you kind of look at the transition of any organization that's, okay, let's just take a benchmark, right? If you had the opportunity to go back 20 years and invest in Google or invest in Amazon in 99, when the stock fell to $9 per share, I'm very sure everybody here will liquidate their entire earnings, go there and put your money there and just rest, right? So it's typically understanding future value, right? And how you determine what future value is. So I think the fundamentals of investment and wealth creation through capital markets and the direction in which startups, typically when investors make investments in startups, they're looking for companies that can typically make the transition from really tiny company all the way up to, potential international capital markets. And everybody's typically, everybody here, this is a business council, everybody's commerce related. And like I said, if you just had that simple benchmark, you go back 20 years, would you make a $9 bet on a company that is worth that $9 per share? Today is worth $3,000 per share. You liquidate everything you have if you had that opportunity now and make that investment. Now, I think the entire structure is developed around finding who can potentially do that. That is basically what it's about. And there are a lot of companies that will continue to make that transition. And so the structure is designed to identify companies that have that high potential. So the reality is that there's a lot of indices being applied into what do you look for? What do you look for in a company? What do you look for in a team? What do you look for in the ability to be able to make this transition over time, to be able to scale? And I think that is basically what drives the concept of valuation. Now, particularly around fintech. Fintech is fundamentally reliant on two very key aspects of global infrastructure: internet and banking infrastructure. Now, banking infrastructure has been built over the last 100 years. There's been a lot of investment into financial and banking infrastructure, and fintech typically leverage that to improve transactions that the traditional banking infrastructure has been unable to capture. And then you talk about telco infrastructure. So typically, which drives the internet? So any technology company is fundamentally riding on existing activity within commercial trade that is either not captured or is enhancing what is already captured. That's the fundamental basis of it. If you look at the most base products, so take into consideration even a channel like social media, it's typically replicating a normal life, but has enhanced it where at the time when, offline, you're able to meet 5 or 6 people or 5 or 6 of your close friends in a year, social media enables you to meet 50 of your close friends a year throughout your life, right? So I think in the same bet, right, if you're able to leverage that technology, leverage the infrastructure. So I think fintech particularly is very I would say, attractive to investors because there has been a lot of investment made in the underlying infrastructure that drives it. So there's a lot of connectivity. So what you then find is that a lot of fintechs are then leveraging common problems that have existed within the payment space or financial solution space that are typically discussed every day. The other day, I was actually speaking to someone who was telling me that, I'm having a lot of problems moving as a business person, as a technology person. I know a lot of people that are having a lot of problems moving money between Nigeria and another country where there's a lot of high trade between those countries. And he said, you know what, I'm actually going to build, if I'm experiencing this, I know a lot of other people are experiencing this, I'm going to build a solution that addresses that, right? Because there are all these problems, and that's typically what fintech is. And like I said, I think the fundamental reality is that when you're looking at the potential of any company, you look at the product the company has, the market they are servicing, and the ability of that market to consume that product. And with fintech, you can see you can typically see what that. So a lot of times, this is fundamentally based on the individual's ability to make that transition, not necessarily even the ability of that product to grow.
Yeah. Collins, you want to?
Which question am I asking now? The first one or the second one? Or both?
Both.
Let me just tell a bit of a story. About 10 years ago, we formed a group called the Lagos Engineer Network. And this was a group of some of us who have been mostly in tech for the past maybe many years. And we felt that we needed to start investing in startups. And we, then, I mean, it was not popular then, but most of us knew that if you go to Silicon Valley and go to more developed countries, you see these things happening, because if you think about it, companies like Microsoft and all of them came through that part. They got initial capital and then raised money along the path. And we had an incident once where we were going around, like people will come to this place and address plans, say, become an angel investor, because everybody here can become an angel investor. Let's invest in this company. So one day we went to a club here called Metropolitan Club and pitched to them about becoming angel investors. And they asked us, how risky was this? And we say, it is very risky. And trust me, we couldn't recruit anybody, because the typical old money is afraid of the kind of risk that comes in investing in startups. I think if we go back today and do the same pitch, we'll probably get a few more people to join us. But what has happened in between that time is that we've had a few successful exits, and everybody has become aware of what is called angel investing, started investing in startups. And today, one of the things I'm happy about today is that the number of people who have become angel investors in Nigeria is growing every day. And it's also growing because they're beginning to see exits. So when a company raises money, everybody wants to be part of that success. So that's beginning to grow. Why I'm saying this is that, again, I talked about the infrastructure like MTN and Co. There are a lot of things that have made what is happening today possible. Some of them are local, some of them are international. First of all, internationally, a lot of money is being raised, and a lot of it is going to tech. I mean, if you look at the top 10 companies in the world today, I think about 8 of them are tech companies. So the world is evolving to the point where tech companies are leading the generation in time, and it's happening globally. So because of that, it has to happen everywhere. For us, I think it's the early days. Money is beginning to come in. Last year, startup raised about $1 billion, right? About 3-4 years ago, it was $1 billion for the whole of Africa. But again, I'll still say it's early days yet, because an economy that has 200 million people, there's a new generation of people who are setting up companies. The companies that are going to set up today are most likely to be tech, because tech companies are ruling the world. And if we're raising only 1 billion at this point, I think it's still very low, but I think it's growing very fast. So I think we can get to the time where in the next few years, when we see $10 billion raised in a year, it's not going to be a surprise. It's going to keep growing until it stabilizes at a point where we should naturally be. The good thing about that is that we have a large population, and technology has democratized everything. Because think about it, why there's a lot of money being raised in fintech is because about 20, 30 years ago, companies like Zenith Bank were a startup, GT Bank was a startup. That generation of people, they funded the companies. Actually, they were very smart people that funded banks. Can you imagine that? But they funded banks behind the restrictions created by CBN. So CBN was regulating them. So CBN would say, you must give us 500 million to start this bank. Or I don't know how much it was then. I don't know who was in one of them, but give us 500 billion. At the point, they said, give us 25 billion to own a bank. Today, a guy comes out of the university, he has a phone, and he does a code and starts a bank on his phone before CBN regulates him. So essentially, that thing you needed, I mean, at the point, if you go to some streets in VI, Zenith Bank will own this street, GT Bank will own that street, because they put 20 branches in those banks. That was their generation. And that was, in all honesty, they were startups and they were raising money, okay? And they were doing it very smartly. But they don't need to, today, the people that are coming up today to start a bank don't need to own a street. They don't own a high-rise building. They don't need to own anything. They need to own a phone or a laptop. And before CBN notices them, people like us who are angel investors have already started giving them money. So they raise money. And in 2 years, and the structure of this funding is that we are the bottom of the pyramid as the angel investors. So we give the smallest amount of money. Before, when companies come to us, they're looking for 5 million naira. Then it was safe. We could raise 5 million naira for them, and they'll start the company. And in 1 or 2 years, they go to people who are above the line. They go to venture capital companies, and those people raise maybe 100 million for them. And then they raise $1 million, and then they raise $20 million, and it keeps going on. So the structure of funding is independent of the traditional structure of funding. And so they raise that money very fast, and before you know it, they start a company. The reason fintech is raising a lot of money is, first of all, I think that there's an opportunity to, a lot of people feel that the traditional banking should die. I'm sorry to say this, I'm sure there are bankers here. And so people globally are putting money to kill the banking industry. I'm not sure banking will die, right? But there's an opportunity for a kill, and money is going for that kill. So if you're a traditional banker today, you should know that the fintechs are just trying to take over your business, because it is easier now. There's an opportunity. The infrastructure to do that is available. So so much money is being raised. In a place like Africa today, I don't know the statistics about banking in Africa, but for the past 30 years, I've been talking about banking done banked, banking done banked. When the people talking about banking done banked, for a long time, it was still about maybe 5% of Nigerians who were banked. So we had this pyramid that only a few people could access bank until everybody got a phone. And then the phone became the bank. And for that purpose, you have 200 million people who need banking. And for a long time, only about 5–10% of them could get banking. So people are feeling that this needs to be disrupted. And it's still like that in a lot of parts of Africa. So if a company starts, if you look at the Flutter Wave today, in 2 or 3 years, they've gone across Africa. People are looking at 1 billion Africans, and they want to provide banking to them. And that banking doesn't have to be the old traditional bank. So they are raising money to make sure they take over that market. So this is going to happen for a long time. A few years ago, it wasn't always fintech, it was e-commerce. And again, people like Amazon rose because something also needed to be done. And the infrastructure today was available, and they took advantage of that. I think in a few years, fintech will run out of steam. The new startups in fintech would have been traditional banks. And then we look for another sector to disrupt.
So it's disruption unlimited. Tayo, this is scary, because I was a banker most of my life. So if you're saying banks are dead, but banking remains. So if you look back 30 years, maybe just for a few of us on this table, but for those of you that have read, if you look back then, we used to complain about infrastructure and all those things. And Itop mentioned the issue of having that infrastructure and, of course, finance. And it looks like we've overcome the infrastructural issues that we've had. Because 30 years ago, when you talk about banking, we didn't have fiber, we didn't have all these things you have. So when we want to communicate between Lagos and Onitsha, you have to install a VSAT dish. And you have to transmit through the copper cable of Nitel. But today, everything is either radio or, there are fiber cables all over. There are probably about 6 landing docks, 6 companies that have landed fiber cables in Nigeria and across the West Coast. So infrastructure has become history. How do you think that has impacted on your own business when you look at the growth and the elimination of the problems of infrastructure?
Yes, that's a great question. I think the concept of infrastructure itself has become a little bit nebulous to the casual observer, right? Historically, 30 years ago, we always thought about infrastructure from the point of view of power lines all over the place, roads, bridges, etc. But what's happened is the concept of infrastructure has changed dramatically, right? Today, fundamental infrastructure is technology infrastructure. A lot of people talk about, when we think startups, we typically think maybe fintechs and all these guys raising money today. But if you really think about it, right, arguably the most successful startup in Nigeria is MTN, right? Invested tons of money to scale their mobile network equipment across the country very rapidly without guaranteed returns, right? It could have gone south, the military government could have taken over, could have shut down everything. It was great risk. When people look at MTN's numbers every year and they're like, these guys are making too much money. Oh yeah, they took massive risks early days to build and lay the groundwork for that infrastructure. So when you Today, yeah, a lot of money is going into fintechs, but the reason for that is, without payments or without access to credit, we can't do a lot, right? If you look at the top 5 companies in the US, none of them is a financial services company fundamentally, right? Apple is not, Amazon is not, Facebook is not, Tesla is not, none of these guys are. So what we are seeing today is the foundation, right? And as Mr. Collins said, in 2 years, 3 years, I don't know how long, we will then get into other parts of the economy where there's real need, right? Because as somebody said, if I build a payments company, right, it's not helping the person who is still poor. I don't have money to send. So why is the payments company helping me, right? So a lot of the startups, including even a lot of what's going on today, are still addressing some of the more pressing needs today. And this is where the venture capital game also gets a little tough because, as Itop mentioned, you're betting on future value. But future value is being created in multiple sectors. Some are more evident today, but a lot are not yet evident. So if you look at the story of Tesla, right, it's an amazing story because when Musk took over the company, nobody still really cared about electric vehicles. Then this climate issue wasn't front and center then, and all of that. Same with SpaceX as well. But in the space of 15 years, you've seen the incredible value he has created, where a company that's producing 10,000 cars, or there about a year, is order of magnitude higher value than Toyota that produces 300, 400,000 cars a year or something like that. I don't know, huge numbers. Because people are betting on the fact that, of course, a lot of people think Tesla is fundamentally a mobility company, but it really is an energy company, right? All kinds of complexities in evaluating these companies, which goes back to the point around how do you think about value creation, right? Value creation is really building infrastructure, as you said. And today, most of that infrastructure is not physical, it's digital. So when you also talk about, valuation, right? Historically, traditionally, valuation is typically driven by how much revenues, right, the company is producing right now, or how much future revenues they can generate. But that also has become a little complex these days because, there's a company called Sambanova. It's a data science company co-founded by a Nigerian-American. And they raised $600 million last year on very minute revenues at, $3-4 billion valuation. Now you look at that as a casual observer, and you're like, what's going on here? But when you think about value creation now, you're not just thinking about the company's capacity to generate revenue. You're also thinking about the development of strategic capabilities. So if I build something I can build something extremely valuable to person A that is meaningless to person B. I can start a company today with the sole intention of selling to Amazon. So I might have intel on the problem that Amazon have or will have and would not have the time to build. And I can double down today building something to solve that problem. I'm not generating revenue. I'm just building it for Amazon. And I know when Amazon sees what I'm doing and they want to acquire it, the complementary value of what I'm building to Amazon is worth 10 billion. But to everybody else, it's worth 0. So when you look at someone who's commanding extremely high valuations, you can sit down on your chair and say that doesn't make sense. You don't know what they're doing. You don't know who they're trying to sell to. So the concept of value creation has become very, very nebulous. And ultimately, what I would conclude by saying is it's ultimately a war of capabilities. When you look at a company, what you're assessing is what capabilities do they have. It's not just, okay, they're generating revenue, they're doing this, they're doing that, they're selling cars, whatever it is, they're deploying this. It's what inherent capabilities are they building that will then enable. So we see MTN today, they're doing all sorts. They're doing financial services. They've transitioned into a holding company structure, set up an independent financial services arm now that runs on its own. But all of that is leveraging the capabilities that they've built in terms of their data infrastructure, their technology infrastructure, and their distribution networks across the continent. And that is a moat. So when investors are also evaluating a company, they're asking themselves, who is really building a moat here, right? Which is what Amazon has done and all these other big companies. And I'll conclude finally by talking about something that is fascinating. The top 10 companies in the world today created about 95% of their value after 10 years, right? 95% of their value today was created after their 10-year anniversary going forward. So meaning from 0 to 10 years, they were building, figuring things out, but it was after the 10th year that the real potential came out. So that's what VC investors do. They look at companies today. You can look at the company that just started yesterday and they've raised XYZ and all of that and wondering what have they done, right? But, like I said, there's a lot we don't know on the outside, but the investors who are investing, like a fund like Tiger Global, that is even, it's amazing, right? Even within VC itself, the VC industry has been disrupted by Tiger Global. And they are being seen as, this like cowboy in the venture investing world. But there also is a method to their madness, right? Their DNA is based off of what someone, Julian Robertson did with Tiger Fund back in the day, and then Chase Coleman came out of that fund and built Tiger Global, and is doing VC investing, using data science, right? And using some sort of index approach to it. But without going into the details of that, bottom line is it's a war of capabilities. People are getting much better at predicting future winners, because when you look at what develop Amazon today, Amazon, is a Web 1.0 company. Facebook is a Web 2.0 company, social user-generated content. Now we're in Web 3.0, right? Where people are now building companies on crypto infrastructure or on blockchain infrastructure, full decentralization, which of course is a nightmare for regulators and central banks, right? Because the power is literally taken away from regulators to in the hands of technology enthusiasts. You look at for example, a couple of years back, Nigeria's GDP went from, 150 billion to 400 and something billion overnight. But what really happened was just that, the statistician general at that point in time, extremely brilliant person, figured out a way to more accurately estimate the size of our informal economy. Nigeria is still 80% informal. What do you regulate? You regulate what you can see. You don't regulate what you cannot see. So essentially, we are only regulating 20% of our economy. That 80%, whoever is fastest and most quickest and develops the strongest capability to unlock what is hidden in the Dumota market and all these invisible places in Onitsha, right? That person will create tremendous, humongous amounts of value.
Wow. So clearly we have so much outside the regulated economy. And you talked about the war of, your words were a war of, there's a war out there, and the possibilities are just numerous. So if it's a war that you are fighting, very clearly it's a viciously selfish war. I don't know if that word is appropriate. It's a viciously selfish war. So what that tells me is that the tech sector is not particularly a collaborative sector. Is not particularly a sector that you want to say you'd enjoy a lot of partnership for growth or development because of the vicious selfishness. I'm not making a statement, I'm just asking a question. So, because I don't know. And, they've said as it was in the beginning is now and forever shall be. I can take you 30 years back, right? And to just confirm the fact that it's vicious selfishness. There is a state today which is probably one of the richest oil-rich states. 30 years ago, the state had just one street. For those that know the history of Nigeria, they'll probably know the state I'm referring to. It had just one street. I wanted to open a branch there. And by the time I got there were 11 banks on that one street. 11. So I was to be the 12th bank. And I got there and I started setting up infrastructure. What I observed was that every branch of the banks that were there had a VSAT, which was a status symbol for banks then. When you put up a VSAT in front of a bank, it shows that you are strong. So I now went around the banks and I said, look, you guys have a VSAT. One single VSAT. I spoke to a telco, the biggest telco then was Telnet. I spoke to Telnet and I said, Telnet, why don't you just install one VSAT, which would carry the traffic of all the 13 banks, or all 12 of us, to Lagos, to our head offices, and we're okay. And they said they've been talking to all the 12 banks, but they said one another that they will steal their data. That when the data is passing through, that they can steal it. So it's, they feel data is like human beings. And they refused. And we all invested satellite dishes at probably multiples of 15, 20 times what we would have spent So I'm saying we have not been collaborating before. InterSwitch and the likes have forced us to collaborate in some instances. So where do we see collaboration and partnership in the tech sector? Because how can we continue to, in quotes, work in silos?
All right, I'll take a quick stab at that and pass it to Mr. Collins and our other panelists as well. I mean, fundamentally, I would say that technology does not change human nature, right? Baseline. In fact, technology is an acceleration medium, right? So what's happening today is, which is, explains a lot of what you're seeing also with the leftist movements and the liberal movements, is technology is massively concentrating wealth in the hands of a few, right? Massively, at incredible pace. And if something is not done, right, by the wider society to ensure a still fairly okay level playing field, it's going to be a mess in the next couple of decades. And which is where regulation comes in, right? Is the government and regulators need to, it's a difficult game. I will never want to be a regulator, right? Because you're always playing catch up.
Yeah, you can only regulate what you see or know.
You cannot regulate what you cannot see. I don't know what people are cooking up next. However, in Nigeria today, in the startup bill is coming up and a few, laudable initiatives are coming up. But to your point, 100%, technology is supposed to make life easier and unlock access. But at the same time, it has the potential to, drive and accelerate inequality to a scale that is like medieval times. So it's really challenging. Honestly, I don't have an answer. Maybe Mr. Collins has been around for a little longer, can give us some ideas.
Look, don't accuse generation of not being collaborative, because you said 30 years ago, the banks were not collaborative. Who did they collaborate with? In fact, if you go back in time, think about the bankers, what I'm giving them as an example. It was an old boy network. It's still an old boy network. A few of them that could get license, got license, and shut everybody out. So, and then they started competing with each other. And there were a lot of things that could have grown in Nigeria in terms of shared services that could have helped the industry grow. It was always difficult. And you can't, in a way, you can't really blame them. That's the nature of entrepreneurship. Remember that what differentiates you between another person who is competing in your sector is the IP you build, the advantage you build with the IP you build. You can't go and share that. If you share that, you don't have any IP anymore. You don't have any value. You destroy your value. That's one. Two is that the nature of funding. The person, if I'm funding you today as a startup, I'm funding you because I want you to be the only person who wins so that I can get my money back. Now, if you now go and start sharing that with everybody and nobody wins, how am I going to get my money back? So that's the nature of entrepreneurship. It's competition, basically. It's built on competition. And the fact that everybody backs one person and says, if you become the winner, all of us win. Those who lose, we don't care. That's the nature of it. But if you think about it today, technology has made the world more collaborative, actually. And the recent incident is, think about COVID. The level of collaboration that led the world to found a vaccine in 6 months or thereabout, or less than 1 year. The last time this happened, I don't know how long it took to get a vaccine, but technology made that possible, that scientists were collaborating all over the world. I mean, if you see the people that were announced, so a company in Germany collaborated with a company in America to found a vaccine and vice versa. So most of them were founded across countries. And technology made that, the level of technology that made that possible could not have been imagined long ago. The current startups in Nigeria, I'm amazed. My generation was less collaborative, by the way, we learned from bankers. But the level of partnership, you see small companies like this, I don't know whether you form any partnership with a bank. The environment is suddenly more collaborative because a small startup starts today and they walk into a bank and the banks have founded what they call partnership departments or something. And then they just partner with them and then they ride on their infrastructure. The fact that the MTN is going to them has created a platform for everybody to come and develop something and then they make the money out of it. If you go to Apple Store has 1 billion apps built by people, and if you make money, Apple makes money. Okay, so technology has actually enabled the level of collaboration we've never seen before. But the most important thing at the end of the day is still a competition. Somebody wants to win, the rest will die. In that Apple 1 billion apps, I think less than 1% makes money. The rest are just filling the space. That is the way the world is. So please, you can talk about socialism. Socialism is nice, but people have to make wealth first. People have to make wealth fundamentally. That's the attraction for somebody to say, I'm going to spend 10 years building infrastructure so that I can make money. If I spend that 10 years and I dash it out, how am I going to make money? So we cannot discourage the fact that entrepreneurship is competition, and at some point you may need to collaborate when it's necessary, but essentially you don't have to collaborate at your own peril.
So from the perspective of the investor and even the investee, collaboration might not be a priority if you have your way. Okay. Selfish interest driving.
It's selfish interest.
I just want it to be clear to potential developers.
I don't want to sound like what do you call it, a capitalist, but entrepreneurship is.
The figures are important. Thank you. Shako, your.
At some point. Okay, so I think I'll just go over some questions that have been addressed and talk about, and then come back to partnership collaborations, or what I call co-opetition, right? Co-opetition, right? Okay. So, or maybe I'll just start from that, as they said. I think that co-opetition is possible. That is a combination of, collaborations, and then, we're still competing, as I said, for that top space, for that largest share of wallets, largest share of mind, largest share of value, market value, by the way. But what I've realized with, traditional firms or banks, financial services, or even, traditional firms in this space is the agility and nimbleness, right? So something happened yesterday. When we initially started, it was even a function of, are you kidding me? Financial services for women. Who told you they needed? Who asked you, right? That was how it felt. Like, why would you even say we don't offer? Who excluded them, right? When they introduced me as financial feminists, that's always the reaction. And we've realized, but we knew that it was more of behavioral finance. What has been excluding women is, especially in Nigeria and in some parts of the country, is rooted in societal constructs, in custom, in tradition, and all. We'll be talking about credit, talking about financial access, and I think it was Tyler that mentioned before about the uncaptured value, especially in the informal system. Look at credit, for instance, and women in agriculture that we fund. They make up 75% of the entire population in agriculture and get only 10% of structured fundings. Why? Because all that they do is limited to subsistence farming, is limited to, like labor. In short, there was a community we worked in Plateau State, in, I think the community is Kuru, and they said that when our husbands take on like the 5th or 6th wife, people with the friends, they go out, they drink palm wine and congratulate him for acquiring another tractor. And then you wonder, how excluded, how long they've been excluded. And these are women that has an uncaptured value, raw value. Because first of these women, they pay back. Look at credit statistics, I said it. I think it was Ayo Balogun of FX that was saying it the other day, that the people they fund, the people that, give, but it's just that, of course, women now, to the last couple, that they don't turn back green, but they turn back cash. They never ask them. A group of women, I think they are Nasara women or so, he said. So these are women, you have them in millions in those communities. It's a lot of job. Next week now, I'm in Kwara. The next one, we are going to Benue, we're going to communities, unlocking this value gradually. But what then had happened when we initially started, and people were wondering, like, is there even a need? And just goes back to what, I think it was Ford that said, so that if you had asked humans what they wanted when he invented cars, they would have said faster houses. So we have now come to the realization where we are now with at least 15,000 women. People are now looking at like, okay, wait a minute, something is happening there. And banks are reaching out, right? Top firms are reaching out. But then you look at the agility, the nimbleness, you go tons and tons, you go dizzy, having meetings upon meetings, documents upon documents. And you're asking yourself, are you not better off, spending this time value? Because going back to funding again, even with funding, and I'm sorry to say this, but I just want to put this out there so that we all do better, even as business people, because I can see the progression from being founders to funders now, right? But I say that when I make money, I'll go into therapy first. It's actually messes it up with your mind. You want to therapy first. So you look at it, and then the funding experience between local investors and international is like day and night. It's entirely different. So when we talk about cooperation, we want to drop some of what has held us back the longest. Like he said, IPT regulators is a lot of, yes, and we do still need regulation. People should not even say that, because we've seen what had happened, how a lot of things have caved in, recently. So we need regulators. We need existing infrastructures, as we said, both digital, physical, and all of that. But then we need agile systems, especially from the traditional sector. We need agile system, we need nimbleness, and yes, I think that just it is. And just to mention, when he talked about, banks going and then banking staying, I can totally relate. So something happened yesterday, and then when he mentioned that, it struck me. My laptop slipped and fell, and the way I screamed so much, everybody ran out of their offices and said, "What happened?" I said, "It's my laptop." And they were looking at me. They said, "Yes, this is the company, right?" So I can take that back to what he said. In that moment, it felt as if, I'm seeing like a tower, like a harvest tower built on Gerardo, built on, coming down totally. And that, just tells you that banking services is becoming borderless, wallless, and it's about the experiences, the innovation of the products. I believe we can create beautiful things. I believe strongly.
Thank you very much. From a woman's perspective, let's take the discussion a bit further now. If we look at the again, I think what's important to a lot of tech developers is the dollar sign. That's the bottom line. So if we look at the top 3, top 4 companies in terms of valuation, you probably see Amazon, you probably see Facebook is now Meta, is it? You see the likes of Meta, you see Alphabet and Co. Apple, Amazon, they have this word, they've coined a word, from this top, sorry? GAFAM, yes.
Google, Amazon, Facebook, Apple, Microsoft.
Yes. So if you look at this GAFAM and the potential GAFAMs, now looking at this one specifically, you find out that there are about 3 or 4 of them that are already over $1 trillion in terms of valuation. 2 of them. Okay. No, I think, over 2 trillion. Yes. So, but there's one thing synonymous with the first 2 or first 3, and that is data. They are massive data storage companies. And, when, again, I look back 20 years, I remember when we had an audit from our regulator then. And the regulator came and they said, "Where's your data center?" And I took them there. I said, "This is our data center." And they said, "No, just this small thing. No, a big bank like you, this small thing cannot carry your data." And then cloud computing had just started. So I was trying to tell them, look, a part of the data is in the cloud. They said, "No, where is the cloud?" And I had to bring out a contract to show them that we actually had the data stored in the cloud. So, of course, there are some 1 or 2 banks I heard they went to visit then, and those ones said, "Oh, our data is stored in 2, 3 different continents." And they said they wanted to go to those continents to see. Of course, they'll get a star code, I'm sure you all know. So, but we joke about these things, but the reality is that today, Main One is probably used to be known as an internet company. But the truth is that I don't think Main One is making its money from, or the valuation it got was not from just the internet. It was from the data center. And of course, we know about something rack. Yes. So everybody's looking at data centers. What are our thoughts in terms of the potentials lying in this sector? And how can people take advantage of this? Because it's the future. It's where the future lies.
Yeah, I think leveraging off what Tayo said, and funny enough, I was actually looking at the same thing about 2 weeks ago, where he mentioned that, if you look at the, largest companies in the world now, 96% of their value was created post year 10. And that's fundamentally a function of data. So as a technology company, one of the advantages that you have is typically because people are doing things through your platform, there's a digital footprint to how activity. And when I came in, Sholagwa was speaking about the same thing, understanding user behavior. So in the immediate term, and realistically, what you use the data to do over time is fundamentally not very clear. But through the way you analyze the data over time, you begin to recognize patterns that create opportunities. And so the fundamental advantage with digitization is the ability to track behavior or track certain data points that become useful over time. And the reality is that the more consumers you have, that's why when you look at a company and they have a large consumer base, or a lot of people are doing certain types of transactions on that platform, that's also what drives that valuation. It's because people understand that by the time all these data points come together over time and you monitor these are things that fundamentally are not possible in an analog environment, right? So you think about, fundamentally, why is Tesla so valuable? It's because of the way the cars are built electronically, first of all. But the reality is that if you look at the transition of automotive development, right, from design to development to marketing, it's like a 4-year cycle before the car can even go to market. But the reality is that Tesla is building personalized vehicles where, from the minute the car goes off the forecourt, they're analyzing driver behavior, what you like to do, where you stop, where you go, all that is feeding. And so it's going to be the first company that will produce cars for the individual, where when you do a change, it will send you, okay, this is a specification that we're typically going to develop for you. It's going to be the first company that will be able to produce cars made to specifications for each of their users. Every single thing you want, your family, your growth curve. If you use Amazon frequently, as you transition, they start to predict if you're buying stuff for baby in 2 or 3 years, they start sending you stuff about, they expect, you're having a toddler now, when teenage comes, all these things are there. That is the power of the data and typically the usage. Now, I think there's a lot of focus around, and people typically spend a lot of time. I'm not very keen on killing yourself too much in figuring it out. I think the most important thing is collecting it and collecting it very accurately and ensuring that you recognize the fact that this is typically going to be hugely important in the business cycle for any individual. There's a bank, for instance, who had, I can't really mention names, but they were one of the first to really push digital lending, right? When they launched their product, where you could access cash real quick, right? It was about 4 or 5 years ago. You dial, or you could go on their platform, and it was one of the real first traditional banks to actually start doing instant lending. And from what I heard, it was incredibly huge to, sort of what their lending portfolio is today. That's because this bank had traditionally a huge retail footprint, was hardly one of the largest retail consumer bases, weren't very focused on corporates as much as a lot of banks. And today, 20, 25 years down the line, is now leveraging that consumer base that they have built, because the data that they have built over time they've now reached a point where they can actually utilize it. So my view is that I think just the fundamental basis of building a technology platform and allowing people to have a digital footprint gives you that edge. That is fundamentally why technology companies typically have an advantage.
Tari, you want to speak
Okay,
to that?
so if I can just lean in quickly, as a fallout, I just want to summarize and say that tech businesses, startups, basically are very fluid. And what that means is that, as he was talking the other time, and I mentioned Flutterwave, and we both nodded, started out as payments, and look at today, they just launched 3.2 the other day. So we started out as, and our definition, our Twitter introduction is, we are a digital financial, we are an inclusive digital financial platform for women. And even in our short existence, we started from saying, oh, women would give them financial literacy on both sides. We'll allow women do target savings. We'll close the biases that's been holding them back from, that is in terms of behavioral finances and working through the mindsets. And then, of course, we offer credits to women in the rural areas. And over time, because every month we are listening to these women, they keep asking for more. That is, even the farmers are saying, okay, you've extended us credit line 1, credit line 2, credit line 3. You've taught us about financial literacy. Now we want to start putting money away. So what that means then is that we can, while we are giving other women that are ground zero credit in the rural areas, we can now start collecting, which means, the value is gradually expanding. And from the women on the supply side, they're saying, oh, we like the impact investment, but we want to be able to do more on this platform. So going back to our intro, anyways, when we came into the market, we are an inclusive digital financial platform for women. Financial platform is in that broad existence. What we are sticking to is our core, that we are, women focused. So there's a lot of fluidity. There's massive value yet to be captured. And in that beauty is where you see the valuations, the growth, and the, mind-bending aha that we see when we see the raises and all the possibilities that happen.
Thank you.
Let me just talk a bit about the question around data centers and data overall. I think that locally, I'm beginning to see a lot of data centers coming into the country. Again, before, the data centers were owned by institutions like banks or government agencies, but now, again, it's been democratized. So people are building independent data centers to serve everybody, again, in a collaborative way. So they build the data centers and everybody uses. And that's going to continue. But why is that so? I think it has happened a lot globally, but it's coming locally because the data center is part of the critical infrastructure you need for tech to happen. Because essentially, remember that we used to be called IT, right? We used to be called IT, then ICT and all that stuff. IT means information technology, right? So the technology for information. And the main thing is that you have to capture information first and then use that to deliver a service. And to capture that information, you have to store it somewhere, and you store it in a data center. So that need for data center has always been there. That's been the fundamental thing. 50 years ago, we had all these massive data centers where you had mainframes. They were all collecting data. And then on the basis of that, we're using data to transform. So for the past many years, any company that has either keeping your data or collecting data made a lot of money because of it, because the world is building data to identify. And it's not just today because of tech. Remember that the most developed countries today are the countries that have the information about their citizens, when they were born, when they will die, when healthy they are, immigration services, passport services. All those things are data collection that countries do to provide a service around security, around immigration, around whatever it is. So data is as the foundation of the technology industry. And you have to build to store it and secure it. So we've made a lot of investment that's gone in there. But where it is going is that at some point, data will be a fundamental infrastructure on which every other thing will ride. Because if you have, there's a lot of technology that goes into collecting people's data. That's why you have things like IoT also, Internet of Things. The amount of data that is being collected today, services need more and more data from a single point. So if you come into this room today, you want to know the humidity of this place, it's on the internet. You want to know how many people are in this room, it's on the internet. You walk across, there's a camera somewhere here that measures you, it's collecting data, it's on the internet. So there's more and more need for data, so you have to build more and more data centers. When you pick your phone in the morning and you juggle between making a call and going to WhatsApp and going to search for, maybe use your map, you'd be surprised how many data centers across the world you access in that instance. Because if you go to WhatsApp, Facebook has built massive data centers across the world that allow you to access them. If you make a phone call, MTN has built a lot of massive data centers that has the information for 60 million people. And then if you do Google search on a map, you'd be surprised how much Google has built the map of the entire world, every street. It's still the massive data centers across the world. What is driving the local data centers? I'm very happy about what Men1 did. Men1 was a forerunner in building a data center and building more and more. But what is happening in Nigeria today is that we're suddenly beginning to generate a lot of local content because, again, we're 200 million people doing many things. So you have to collect the data of that 200 million people. We've not collected enough. I think we are very deficient in data collection at this point, but it's happening at a very fast level. But what is happening between the movie industry, the music industry, the telecom industry, and then the startup industry, is that a lot of content is being generated and people are becoming aware and they're coming to build local data centers to collect that. So Netflix is in Nigeria. Netflix needs data centers because we are building local movies. Fintech companies, Microsoft and co, I think Amazon, all of them are coming here to build data center because you guys are generating a lot of data. So there's going to be it's going to be part of that infrastructure we must build to make sure that tomorrow when you wake up, your data is safe, it is stored, and then you keep generating more data and then it's stored somewhere. Thank you.
Yeah, because they are saying now that data is life. And
I
everybody
think
data.
everything stops at essentially everything we do is about collecting data, and then people are using the services on top of that data to make money. Everything, if you're doing marks today, you are depending on data that you generated or somebody else generated. You know, that's basically what our business is.
Interesting. Before we go on, we would be moving to the Q&A session shortly. So for those that have questions, please start putting down your questions, whether online or physical. We'll be taking them as much as we can. So let's just take one more issue, which is also very fundamental, and that is the issue of talents. Someone said last month they lost so many staff to, would you call it brain drain, or Europe feeling the impact of Europeans settling down in their own respective countries, and suddenly the UK is opening up its doors, and so there's been what I would call the quality and the velocity of talents. This is becoming a nightmare for an average entrepreneur, for employers of labor, and for the tech sector. I have felt it too, because a situation where you recruit a very smart boy, you groom and nurture him, and maybe 2 years after, he's earning maybe about 400,000 or 500,000 naira. And all of a sudden, he comes to you and he tells you to, sorry to use this word, piss off. And he gives you an offer letter from some company in UAE that's offering him $5,000 a month. And if you were his father or his mentor or his uncle, even if he's cursed from his village, would you advise him to stay with you or go for the new job? So the only thing I could do was pray for him and wish him well and tell him not to forget me when things get better. So there is this very massive velocity. I'll use the word velocity of talents. And this is also another direction of disruption itself. How do we handle this kind of situation? Or how are we handling it? And what do we see as the future of the movement of talents across the sphere of the world?
Look, I think it has its challenges, but overall it's an opportunity. We've complained about the youth bulge in Nigeria that our age is our average age is about 21 years or 19 years. So Nigeria is the whole of Africa is actually a young continent. Most people are young. And the technology industry is a young profession, by the way. So, so it fits us. A lot of companies are going to grow. Today, I lose. When you wake up in the office today, somebody resigns, and you can't compete because the business is either going to UK or Australia or whatever is going, or it's going to a fintech. But I see it, it has happened to us a lot of times. When MTN came into Nigeria, the level of disruption they created in the tech industry was unbelievable, because these guys were just hiring everybody. And most of us were running small tech companies then. So they hired out from all of us. A lot of us died because MTN and Co were recruiting all our engineers. And the banks now did the consolidation and did the same thing and recruited everybody. Okay? So this will always keep happening in the tech industry. But I think that the opportunity that is happening now is that there's too much unemployment in Nigeria. So I think it's not as if we have people. We have 200 million people for us. So I don't think the problem is having people. I think it's just making sure that people see the opportunity in that sector, and younger people who are coming up today can go and do a tech and then fill in the void. But a lot of us who are running tech companies today will struggle, and it's not just every company actually. Because if you go to any company today, most of the things people are doing If it's a bank that hires tech people, okay, those tech people can work up one day and walk away and do some other stuff, go to a startup or go abroad. And even some don't have to go anywhere anymore. They stay here and work wherever they're going to work. So I think it's an opportunity for countries to restructure its workforce and then make sure that we train people for the right things they need. The good thing about tech is that if you read history, you can become a tech person. If you read biology, you can be, these days when we're hiring people in my office, we don't ask what you read as first degree. So you hire anybody and train anybody, and knowing that they will leave anywhere, but you keep training them all this up. So I think that we should look at it from that positive view. All of us have to go back. My company, the first time it happened to us about 10, 12 years ago, we set up an internship program and modeled it around the fact that we'll get people, they'll spend 2 years, and if they're 10, but in 2 years, there'll be 5 of them left. So we just modeled it 10, 5 in 2 years, and then in 5 years, there'll be 2 or 3. And we've done it for the past 12 years. So a lot of times, we've had people who have been growing the system through our internship program. I think that people have to find their own model of keeping talent, because this is going to get very bad, extremely bad. A lot of startups are going to die because they will suddenly wake up one day, that application you're using, there's nobody to support it. The service dies because all the people have moved to whatever they've moved to. So everybody has to just be aware of this, but it's a good thing ultimately for me.
Yeah, I mean, the war for talent is incredible, and it's global, right? I think one of the most helpful books I've read is a book called Work Rules, and it was written by the chief people officer of Google, right? And it's amazing. In that book, you see that from 0 to 10,000 employees, almost everyone who was recruited at Google was a referral. Go and bring the smartest person in your network, go and bring them. Whatever they want, we'll give it to them. And that's how they build the company very, very aggressively with talent, right? Because every time you see a really successful, large-scale global company, right, it wasn't built by machines, it was built by human beings who are really smart, the very best. And they're so strategic about how they find people. Now, in Nigeria today, people often talk about the brain drain from the point of view of people moving to the US, but people are not even moving. A lot of them are not moving. They're working from here in some house in Ibadan or Akure, right? With the internet, and they are working for an American company or UK company that's paying them in dollars. So they're in your country, but they're not in your country, right? And if they have a foreign bank account or a crypto account and they are moving their money there, CBN cannot see the money that's coming in or going out. So it's really, really crazy what's going on. I would say that what a little bit of what I've seen is the war for talent is also kind of like understanding the nature of the world today, right? Especially with the younger people, Gen Z, what they want, what they look for in a leader is very, very different from. I mean, I joke about it in our office, when, in my career before I transitioned into entrepreneurship, your boss is coming in the elevator, you wait for them, you carry their bag for them, good morning, sir, right? Today you want to enter the office, the engineer wants to enter the office, he gets in the door ahead of you, right? And looking at the guy, wow, times have changed. He doesn't care whether you're the CEO or the CMO or whatever sees in front of your title. He's doing his own thing, you're doing your own thing, and it's not a big deal. We're both human beings, man to woman or woman to man or whatever, right? But it's the reality of the world we live in today, right? It's much more flat in terms of communication. So one of the things, for example, that we realized is, of course, the concept of a flat organizational structure doesn't make sense. But what we say is we run a flat communication structure. So anybody can talk to anybody in the company at any time, right? Without having to go through anyone. But of course, you still have hierarchy, you have team leads and all of that. So I think there's organizations recognizing the uniqueness and the differences in the world we live in today as compared to before, and actually making a conscious effort, right? I have, for example, had to get a book on understanding Gen Zs, and I had to read it. So how do these people think in a very different way? I don't get it. And I had to really study
part of them. So how would I cope?
Well, it's tough, right? So that's one part. The other part is, I think, at an even more strategic level, because the war for talent also is now a transnational war, right? It's nation against nation. Today, America is the greatest country in the world, not because it's because they have the most diverse talent, right? I mean, they are so paranoid about getting talent that after the Second World War, they launched Operation Paperclip, if you know what that is historically, where a lot of the Nazis who committed heinous crimes, in World War II, the scientists and the engineers, they forgive their sins and move them to America, and then you save us, right? They are that paranoid about talented people that you've done something crazy, extremely heinous, but because you're smart, will forgive you your sins. And then, of course, when Von Braun, who was a very central figure in helping them land on the moon, right, is a former Nazi. And they brought in all of those brains. And the most developed countries are extremely adept at that, right? They will do anything to go after the best talent anywhere in the world. When it comes to talent, there's no discrimination, I assure you of that, right? So it's also beyond companies trying to do what they can do. It's about, countries as well, creating a strategic plan for talent. If you look at the countries that have developed over the last 50 years and broken the back of poverty and gone straight into first world status, China, Japan, Singapore, and so on, all of them have one very, very common thread. They invested massively in STEM education, right? Everybody knows math, everybody knows engineering, everybody knows science, everybody, right? China, a few months back, limited the amount of screen time for their young people by fiat. It doesn't matter, as a parent, that's not your decision to make. We as a country have said that exposing extremely young people to too much screen time, right, hampers their overall social development, right? So they reduced it. That's a national strategy. So the question is for us as well, as a society, because one company can do it. Maybe you can do something that helps you succeed as a company. But ultimately, it's a national battle, right? How do we make sure we're investing in our young people and giving them a chance? So if we have 20 million young Nigerians that understand technology and have those skills, even if they come and, take all of them out of the country, maybe they take out 5 million, we still have 15 million left. But if we have 20,000, right, and they take 25,000, right, what are we left with?
All right, great points. And just as Tayo said, it's worrisome, but I don't get worried at it because of the numbers and because of the, amount of opportunities out there. And I'll give an example. We launched Women in Tech Nigeria in November, and we opened our first program, which is to train 1,000 girls and women in tech skills. Either you want to switch or you want to start. Now, 1,000 girls and women, and we were quite new here, even though we have chapters across the world. And as I speak today, we've had over 4,000 applications. We only ran the first track. We'll be starting the first track in March, and we're able to take 200 people for product management while still, screening through the rest. So what I'm saying is that, imagine, like you said, they drain 100. Women in tech alone has trained 200. You release them into, the market. Men in tech eventually trains 1,000. I know in Lagos alone, the last time we captured, I think it was Damilola of CC Hub that was saying that we have over 230 hubs in Lagos alone. So there are hubs. So the question to everybody, people listening or people who are wondering how can I get into tech, or entrepreneurs, corporates like us, is how can we also lean into skilling these people up, girls, boys? How can we, but that being said, into skill up. The next is for our organizations to, like you said, I am so happy, and I keep saying this, that I am indebted to my last organization, Mary STEM, because it was flat as flat should be. First name basis, they were very culture driven. Till now, that's why I still struggle. I don't have an EA or PA. And I think people, the day they are starting their startup, they have 4 PAs, they are 10 EAs, and they still miss meetings and, mix up their schedules. He never had, and things were effective because what they did was they democratized insight into the organization. I was just a head. I wasn't, but when we knew when we were doing well, we knew when we were not. So there was this sense of ownership, belonging. And now we have some startups that even with stock options, people still say, you know what, I'm not staying here, I'm going. Because these are generations of mental health. Everything is mental health, right? So they'll say, oh, no, he screamed at me, I'm leaving. Oh, I'm leaving. So we also want to, like he said, see what makes them tick. And I'll tell you a few of them. They want inspirational leaders. So you can have all the money and, be intelligent and all of that, but how are you inspiring them? It was my birthday last Wednesday, and one of them said that you make dreaming big easy. I don't know what that means, but with you, it's easy to dream big. And if it's okay to say that, just says that you are inspiring. They want inspirational leaders. So yes, we have to democratize insights and also, if I can say, operationalize empathy. Okay, so since we started, as a matter of fact, was when we realized that we are a financial service, and some people will still want to come at Nigeria now. Where are you people? Are you sure you won't run with my money and all of that? That we opened our office at Hughes Avenue, Yaba. Before then, I didn't know a lot of, because we're a pandemic baby, we launched in 2020. I didn't know a lot of. The young chap who did our UI UX was in Ilorin. As in, we built, we built virtually, right? So when we started, some of our engineers don't even show up at work. The ones who do, we just do our stand-ups on Monday, and people are working. Last week, one of the team leads says she'd been having some challenges and says, I won't be coming to work. Can I work from? She was in Ibadan. She had a family who was, ill. And of course, by all means, and I check in, I do all of that. And just to quickly time, I remember a particular organization I worked with, a twin lost her twin and had to go, and they called her back, right? To say, no, you can't go for that long. You'll be setting precedents and all of that. How does that person feel about that institution? So even in organizations, let us lead with empathy, operationalize it, and then democratize inside. Let there be a sense of belonging. And we will realize that they stay longer. I've had people say, I have this offer. The offer is like 100% more than what he gets, and then can you just have 20% and I want to stay? That will not happen all the time, but it can happen.
Okay, you want
I
to
think
just say short?
Yeah, I've had my view on this is extremely good for the country. I think number one is that in Nigeria and in Africa, we have a massive youth employment problem, right? Underemployment and massive employment issues. So anybody that can anyone that can get a job or get better income, overall benefits, we look at level of insecurity and just basically people not doing anything. I think it's just important that people actually have a way to get jobs. Second thing I think is that I've always been a big believer that technology is going to liberate not just Nigeria, but the continent overall. And this is because people will find ways to earn income without having to rely on traditional systems. And once they're able to earn income and get themselves out of poverty, they begin to be able to make independent decisions that are not necessarily tied to traditional political class, right? So they can actually start participating independently in the voting process. So I think all these things are fundamentally important to the development of the country and continent overall. And I think that if you look at the music industry once again, anything that basically gets people to earn income, you would see a huge sort of people following that trajectory. So, people have seen a path where if I have a good voice, I can make a good beat. I don't need to know anybody. I find a way, put it on social media. I get followers. I can release my music. I get shows to do. I earn income. You see a lot of people following. If you go to India, there's a saying that they have in India, if you throw a stone up, it will hit the head of a developer. That's because they have the same problem, right? So I think that what's happening now, when I see those crazy salaries, I'm a big, I'm a big, would I say beneficiary? I'm suffering it as well. Every week, every month, people are resigning, they are leaving. But the truth is, you see these salaries, just like you said, and it's like, wow, congrats. I'm extremely happy for it. I only thought, people that were in the oil and gas industry could get these kind of opportunities. And you find people who were living in Lagos under fairly constraining conditions, and these guys will literally reduce their cost of living by moving to Ibadan, right? But their salary and incomes have tripled, in the same time. And then they move their investments they're also making investments in crypto and trading. So these guys are generating wealth for themselves, really young kids. And what I find is that if there's a path, if they are showing the light, because someone mentioned it now, if they're 20,000, then it means you don't need to, trust me, you don't even need schools. They will go on the internet and learn how to code. I know a lot of them that haven't been to any kind of formal training. They hear that, look, there's somebody who basically came out from secondary school, didn't even go to university, trained, and is earning $10,000 a month. But trust me, they will go and find, their parents will put them on the internet, go to the code, learn and do that thing. And you're going to find that number. So the amount of developers is going to increase, right? Just whether you develop schools or don't develop schools, just by sheer demand and people's willingness to survive, they will. Now, as a people, can we make that faster? Yes, there are a lot of things that we can do, but I think people will naturally flow towards opportunities that are there. And it's great opportunities for people. The second thing is that we're looking at all these global companies and their valuations are increasing, and tech companies. It means that the demand for development skill is increasing over time globally, right? And then there's COVID, which has made remote work very normal, things that were not possible 3-4 years ago. In fact, I did a sense check to a lot of my colleagues in the technology sector, and I asked them, who has on-site development teams? Nobody any longer has it. In fact, we were recently advertising some roles, and we noticed that the application rate was so low, and one of the guys in HR made a mistake by leaving on site. Nobody applied. They wouldn't apply because I asked all my colleagues and everybody said no, they're just required to come in once a week for integration. That's just come and meet your team members, but nobody works from there. So the power is moving into their hands, and this is great, I think, for the overall ecosystem. Now, the third thing I think is that if you look at the overall transition where there's a lot of demand, and it's affecting everybody globally. So from the Googles to the companies in India to the startups, and look at India, for instance, producing a unicorn literally every day now. It's the same technology that is driving it. On the alternate side, there's something called low-code, no-code movement, which supply and demand has. Also, the cost of development is getting so high for a lot of companies. There's a movement now that basically has designed solutions whereby you can build out technology, at least at an early stage, for a lot of various solutions without investment in coding. So it's balancing out. So I think all these things in general, yes, there's an initial scare, but I think, at the end of the day, if human beings are fundamentally benefiting from it and it is addressing youth employment, whatever it is, I think is good for us.
Thank you very much. I think generally it's obviously heading in the positive direction, but there's another discussion, or there's a discussion for another day, which is its impact on mental health, because that is another major issue. I've had scenes where people go into what I'll call trance on their desk. I've had 2 instances in my office. I have 75% of my workforce as millennials. So I go through that periodic nightmare, so that's another discussion for another day. But obviously this has led to a lot of impact on people's mental health. And of course, it's something that we'll probably need to look at. On this note, would like to take a 1-minute video by one of the sponsors, very briefly, just 1 minute. Then would take on the questions and answers. Okay, thank you very much, Max. We'll now probably start with our in-house questions and answers. Okay, I'll start with you, sir, and I'll come to you. Okay, 3 from the table, that's interesting. Okay, can we have the...
Thank you very much, the moderator.
I listened quite attentively. All the good things going on in the tech space. But this is my 32nd year of working nonstop. And as a corporate leader, I'm concerned about certain accompaniments of the successes we've been discussing today. And I'd like to talk about things like corporate leadership, etc. And I'll tell you what I mean. We did a tour of Google campus, some 2017 or 2018, along with other CEOs, and it was quite amazing what we saw. But in all of the, all that we saw in terms of staff and demographics, there was still strong corporate leadership going on there. But I fear that succession might be a problem in the kind of institutions we're discussing today. And I'll give you an example. It looks like only rebels now succeed in this tech space. Yeah, because I've had to yield in my former institution that I used to run. Because, by the way, if you don't understand these people, then you lose them. So I think there was no time we had training in our training school that I didn't go to address the people so that they can actually, so you begin to know how they reason. You see, Oga looks like them, colored socks that matches the tie, and the trouser never touches the shoe. So if you don't understand that as a leader, you won't hire these people, they'll resign, and you're going to have issues. Now, how do we transit from what they taught us in training school in those days, how you come out looking like a corporate man? Those guys don't have time for that. So I had to yield. I signed off approving that all IT staff are allowed to dress down. So you see them looking like, in fact, he tried. He's even wearing a jacket. You know, because we're losing them. So if dressing was a problem, I had to yield. But I won't yield to my staff that go to talk to clients, you know, looking like, I don't want to go there. So I don't know, I'm making this comment and then, so we can stimulate our thoughts as we progress. I'm worried about the corporate leadership that will emerge going forward if, as we transition, we don't transition with those things that matter. We talk about team bonding. We used to have activities, even in Google campus, you see how everybody, they eat in a common place and all of that. But then with working remotely, you don't build that. I once told my wife that, you know, if you actually want to marry and you want to know the real person, ask people that have worked with this person in high performance environments. We've had situations where you're preparing for a credit committee and it's 8 p.m. The leadership changes the structure and you have to be there till 1 a.m. That's when women will take off their shoes. In fact, that's when we realize that there was no difference between men and women, you know, because our real characters would come out. So how the human development part of it, how do we ensure that technology is not going to turn all of us to robots rather? Personal financial management. We were taught in the early days, the moment they paid you bonus, in fact, we were taken through personal financial management so that when you earn bonuses at that young age, you begin to invest because you know this money is not going to come in this quantum going forward. How do you handle those things when you see, I mean, when I saw my daughter's first salary, I mean, at 24, at 25, she's earning the kind of money a deputy manager in a bank earns. And I had to spend weekends teaching her personal financial management. If I didn't, she would probably be like the MC Hammers of this world. When I was taught personal financial management, we used MC Hammer as case study of people that made billions and lost them because nobody taught them what to do with money for the future. So I'm just looking at the human angle to everything we're talking about, everything that technology has done. Even leadership across geographies. I used to be a CEO of a bank in Ghana. Later on, I supervised Liberia and Sierra Leone. You would think that because we are West Africans, that we're all the same. No. It was a shocker for me when just one statement from me turned me against all my ESCO members, and I didn't know. Thank God, some guy, his father was a professor in UI.
he came to my office and said, "Oga, people are angry." And I said, "Why?" They say, "You offended them." And I just used the kind of maybe slang you use in Nigeria, and everybody will laugh. And they said it was an insult. And I'll tell you what it is, just so that you also know cultural sensitivity is coming. You can't sit in front of your laptop and learn cultural sensitivity. When I resumed, at every meeting, every person was talking about how they will meet their loan targets. And I was worried because the oxygen of banking is the deposits. It's the depositors that own the bank. And if they don't deposit money, how will you create loans? So I said, everybody, you talk about how you will create loans. Nobody's telling me how they are going to raise deposits to fund it. And then I said something like a typical Nigerian. I said, any goat who graduates from the university, I said, any goat who graduates from the university today can actually create a loan because you just give out the money. The only thing is that your risk management might be poor, in which case you lose the loan. But giving out a loan shouldn't be such a big deal if you cannot fund it because you will not have a bank. Just because I said any goat who starts banking today can give out loans. I didn't understand that in Ghana, goat is called a ponche. If somebody calls you a goat, that's one of the biggest insults. I mean, the pepper soup is a ponche crack. So, I mean, so if anybody calls you a goat, so they said I called the staff goat. I had to do a town hall meeting to say, that's how we speak in my country. I'm sorry. And then I called my then boss, Tony Elumelu. I said, when we do CEO posting, we need to have cultural training before any person is deployed. Because I learned the hard way. So by the time I started supervising Liberia and Sierra Leone, I was a little more tamed, you know. And so just to round up, I'm worried about that. I mean, I'm just stimulating conversation. I fired somebody. We did a branch on Admiralty that was supposed to be a model branch. And then a staff, someone called me from the banking hall, you know, because I share my phone number, you can call this number. Somebody called me from Admiralty Banking Hall and said, there's a teller here who is wearing headphones and apparently just listening to music, and customers are queuing in front of her. And when people talk to her, she just does that, like, hold on. And she's, I said, is that true? So I sent somebody immediately, mystery shopper from head office. So they got there, even the supervisor was nonchalant. Anyway, to cut this long story short, we fired the girl, and because it was clear, CCTV, they played back CCTV, and you know. So 3 days later, I received a WhatsApp message on my phone from a staff I hardly know. He said, sir, I'm the girl you fired 3 days ago. Say your problem is that our generation is not like your generation. You don't understand how we roll. This is WhatsApp message to me. You don't understand how we roll. That she's moving on to where she'll be better appreciated. I sat in my car and I was like, some mothers do have them. You know. Anyway, so in conclusion, listening to everything here, I mean, we've heard that, and I would like to be a tech entrepreneur and make all the money. But I think I would do it better because we climbed up the old-fashioned way. How do we ensure that companies are not mismanaged by incompetent people who simply own those companies because they made money? These are open questions, and those are my comments.
Thank you very much. Sir. Thank you. I'll come to you, sir. Can we take the, yes.
Hi, good evening. Sorry, good morning. It hasn't been that long, but it's nice to be here. My name's Stanley. I'm the chair of the British Business Group, and I have been for the last 5 years since we reformed it. And I've got my deputy chair here, Dr. Amma, who's taking over in April. So we're very honoured to be here, ladies and gentlemen. Thank you.
Thank you.
Can I say I really enjoyed the debate this morning, and I was at a meeting yesterday with, we had a visitor from the UK, a minister, and lots of people stood up to speak, including the CEO of Shell and the CEO of Standard Chartered, and each of them said they were Nigerian optimists, and I am a Nigerian optimist. And I wanted to, so in the UK a while ago, the silly fellows had something called Brexit, and that was 2 words put together, which is Britain and exit. So it was a portmanteau, which became Brexit. So I'm a Nigerian optimist, so I'm going to say I'm a Niger-mist. Now, unfortunately, that also works with pessimist, but I am an optimist. I wanted to ask the members of the chamber, we've had various meetings and a visit from UK Export Finance, who are based in Ghana. And one of the great success stories is CISO Global that was started here. And they have blockchain, and they, within the blockchain figuration, managed to be very successful here in the security of selling properties together with banks, lawyers, etc. And so successful, they exported the business model, and it's now in 5 African countries, and they're just launching it in the UK, and it came out of Lagos. And I just wondered if you had any success stories with UK Export Finance and the interaction, because they only require 20% content from the UK, which can be advice, it can actually be physical items, but clearly funding is needed in the tech sector. This has been said, and I just wondered what the interaction is from the chamber with UK Export Finance and how that can be put forward to this meeting to help the young people become entrepreneurs and drive this business forward. Thank you.
Thank you very much. Anyway, it's been noted by the council and we'll get a response. Yes, please, this way.
Good morning, everyone. Thank you so much. It's been a very interesting conversation so far. So I just want to ask a question.
So your name?
My name is Omokorede Amond. I'm Product Growth Manager, Africa Prudential.
Okay.
Yeah, so a lot of what has been spoken on has been kind of centered on the fintech space. So I just want to ask if, for example, you had unlimited access to funding, you had the best hands at your disposal, what sector would you try to leverage tech to disrupt? That's my question.
Okay. I hope you guys are noting. Okay. Yes.
Thank you. This has been a very, very insightful conversation. My name is Senami Amusu. I am a consultant with Grovest, a private debt fund. I know we've talked about everybody in the tech space, but I always like speaking to the founders themselves and their mental space because it's actually a tough job. So my question is, in terms of being a founder and founding this many businesses or this many startups, so it's an open question to everybody. What makes you vulnerable? I think it also help other people. So what makes you vulnerable as you go through this process? Thank you.
Okay. Thank you very much. Any more questions? I have a few online. Okay, maybe we should take or try to respond to the comments made so far from Mr. Okonkwo. Well, he talked about corporate leadership. He talked about some of you, because it's now you and us now, because most of the questions is you and us. Some of you guys being rebels and succeeding so well. And, I find that a bit funny, and I take it from the perspective of Elon Musk. Elon Musk is over 50, but he behaves like you guys because he says some things sometimes and, he just doesn't care. The stock market goes up. He says some things, it goes down. He just seems pretty erratic. So corporate leadership, personal financial management, and the cultural shift, the cultural awareness. Maybe we should react to that first before we go to the other 2 issues. Yes.
All right, so I'll quickly take a bite at that. And starting first with the rebel thing. I think it was Jobs that for the longest time, Apple had this, statement to say that the future belongs to the rebels, the dissidents, and those who are crazy enough to believe they can change the world, right? It's a statement I hold on to. So it's right to an extent, and that's why you realize, as she said, what makes you vulnerable looks like, there's a lot of resilience. So you've got to be a rebel, especially in this ecosystem. It's in this thing. You've just got to be. A Nigerian founder is different from, a founder in the States. The circumstances are different, even though they are growing a business. Having said that, some of the things he raised, maybe because, I'd gone through the traditional, the system, financial processes and all of that. Till now, I struggle with my people doing emails. Everybody wants to do WhatsApp. They want to do Slack. They're sending you document invoices. They don't even want to raise invoices. They just say, oh, we need to pay for this. We need to, and so it's a major struggle, getting them into those processes. And it just shows that, as he mentioned, we need to create a lot of, not a lot, but like simple operational systems for them to ride on. Otherwise, everybody comes in and they just want to throw it at you, throw it back. We make results ad hoc style, we roll out, project completed. So yes, we need to create some some processes for that. I'll allow it to talk more about this.
So I think in terms of corporate governance, it's one of the reasons why I also like companies actually exposing themselves to venture capital. A lot of people don't realize how much governance comes in with receiving external funding. I particularly have always been, as an individual, I like the idea of corporate governance. I like building institutions that are not subject to my views. I like organizations that outlive me all the time. And I like the idea of eventually moving to a, if you're in that kind of environment, you're typically being schooled for potential public markets, exposure, and things like that. So it's very strict from day one. So I think a lot of people don't understand how much corporate governance goes into, forget what people are wearing or anything like that, but you have your investor relations, you have your, quarterly board meetings, and you're also subject to a lot of what I would call soft management, right? Things that I don't even think are considered within a lot of Nigerian companies around sexual harassment, abuse of power, things like that. You're subject to a lot of those things, internal audits. So there's a massive level in terms of separation of powers. I've also seen a lot of situations whereby a lot of founders, it might not be announced, but have been asked to leave or have been suspended, or some of their board members also have, pulled out support for them for things that I think are especially around, things that I think are more in corporate sector are maybe more allowed around sexual harassment. A lot of founders, you can't try any of that nonsense because you're subject to a lot of international standards. A lot of funding that we receive is coming from global markets. A lot of it also has DFI, ESG standards that are coming there in terms of gender balance, within your company, how you transition, how you do a lot of those things. So I think it's great, and it's one of the reasons why I like it, because it's great for a lot of young people to be exposed to those things very early. So the way their mindset are built about how you run your company, there's a lot of corporate governance that comes into that. And before you sign any kind of shareholders agreement or any of those things coming up, they are very clearly outlined. The kind of board members that you have. You can't bring in family members. You can't do any of these things. It's actually very good. I think in terms of behavior, I don't think any business will succeed if you have poor customer service. I don't think it's about generation. It's a generational thing. I think it doesn't matter doesn't matter whether you're a millennial, Gen Z, Gen X, Gen F. If you have poor customer service and you're not attending to your customers, or if you tolerate poor customer service, your business just can't succeed. It doesn't matter how great your technology is or how great the product you're delivering is. So I think in terms of corporate governance, I feel that, as a startup that is typically exposed, even if you go through an angel funding cycle and you move through the standard stages of, financing, you're typically exposed to the most strict global standards in terms of corporate governance. And on the second level, in terms of behaviors and things like that, I think that, it really is a fundamental nature on the company. Now, I don't think customer service is something that is really driven very strongly across a lot of Nigerian companies. To be frank, it's not something that is taken as a benchmark that a lot of people, things like NPS. In technology, fundamentally, your business is driven by referrals. Realistically, right? So you look at your customer acquisition cost. If you're providing a service, now nobody here ever had anybody, Facebook marketer, come and meet you, right? Or nobody ever saw a WhatsApp staff come and meet you to use the product. What happened? Somehow somebody told you there's a great product. So if you look at a lot of the applications that you typically use, you never really interacted with anybody. What happened was a referral-based program, right? A referral-based game where somebody's telling you that, oh, I've used this thing and it's good. Look at your ride-hailing services. Look at all those kind of things. If someone doesn't nudge you to say, I've used this thing and I had a good experience, So technology delivery is very fundamental. Good service quality and delivery is very fundamental to how technology scales. And because at the end of the day, it's all about user interaction, right? It's not necessarily a service that you're going to and you're going to be the hotel. At the end of the day, it's you as an individual interacting with either your device or your laptop, and you. So it's usually about you using that service. If that service is poor, you're not going to convert. So customer service is very fundamental to how you succeed. So I think for me, if you're not driving, any successful company has to be built on the tenets of great customer service and customer obsession. So those are sort of my.
Okay, thank you.
I'll just say something brief. Now, globally, the image of a tech founder is the 19-year-old who doesn't finish college and then starts a company and becomes a billionaire. I think it's too romanticized in a way, because I think there was a study by, I think MIT or one of MIT, right? That talked about the average age of the successful founder. And it was, you have the number, 45. So it is not that 19-year-old. By the time you are 45 and you're starting a company, you've worked in a corporate organization, you understand corporate culture. And I think you can build a company that has corporate culture. So I think that those 19-year-olds, for one who becomes a Bill Gates, I know the number that fell. So, and that one that becomes a Bill Gates has raised angel money, has raised venture money, has raised private equity money. I'm an angel investor, so we invest very early. When we invest in the founder and say, look at this founder. We've looked at founders and we don't like their dressing. We say we're not going to invest because we feel that this person, when he sees our money, maybe you put it in dressing only and he will chop the money and go. And believe me, as founders several times, if you know the number of companies that have invested in that field. So you invest in certain things. But once it goes beyond us, the venture capitalists so as an angel investor, I invest with my money. But as a venture capitalist, you invest with other people's money. And when you are managing other people's money, you have, they don't have corporate governance, you yourself have corporate governance. Yeah. You have to make sure that you return the money to the people. At that point, sometimes when you want to sign it, you ask the guy to sign a death certificate or whatever he needs to sign to make sure that your money comes back. Okay? And it is those people who put the right corporate governance, otherwise they will not invest. One. Two is that the failure rate at the venture level and angel level is very high. And most of it is caused by sometimes corporate governance. Because as venture capital companies succeed is that if they invest in 10 companies, 2 will be blowout success, but 8 will fail, or a few of them will just be normal. So those ones that fail, they already factored in that they're going to be bad founders. They're going to be those who cannot execute very well. They're those who will see the money and buy a Rolls Royce, all that kind of stuff, right? But the 2 that follow the process will succeed and they ride those kinds to the top. So I think those things are taken care of. So I don't think we need to bother so much. But this statistics is about 45 years. Most companies that, remember that you're only a startup for about 5 years. So all these things we're talking about, everybody that is here now, by the time you 5 years, we'll forget you as a startup because you come back to become a normal company. At that time, you become a normal company. You're no longer a flashy company. You have to know that's the time you have to go and do the work of building a company. And believe me, some startups don't understand it. They think that they want to be startup forever. And then they will be writing that and then forget building their company. And those guys will fail. So eventually, corporate governance will come. You'll be forced to accept it, by the way. The issue, just one more, the issue around culture. I think there's always a generational fight from baby boomers to, there was a time baby boomers who are getting old now thought that they were the youth. And they fought with the generation before them about how those guys were very old-fashioned. Now, you see a Gen Z, recently was millennials, right? Millennials thought that they owned the world. Now they're getting old, by the way. So those things will always happen across generations. Your parents, you think that your parents are old-fashioned. Your parents thought that their parents were old-fashioned. It will always happen. So, but the most important thing, the 2 things you mentioned, one is that customer service is universal. Every generation knows that they have to deliver customer service. What has happened to the current generation now is that the tools to deliver customer service has evolved, but you still want a good service wherever you go. It's not about the dressing and all that. It's about delivering that. The second thing I just noticed, just 1 second, please. There's a second feature that I noted where is performance. everybody wants a person who performs. Now, the way to perform has changed. These days, my office has been locked down for 2 years. And I go to office maybe once a month. And nobody, by the way, nobody in my office wants to come back to the office. When we do a poll, everybody says, as I said, if you say everybody must come back, I'm sure half will leave. So it is changing. But what we're not going to accept is that you're working from home and you're not performing. That's a different thing. So I think that we have to redefine or understand what performance means for every generation, whether it's Gen Z or, don't tell me you're Gen Z and because of that, you're not delivering, you're not servicing a customer who has come to you. You should deliver it actually better because you're Gen Z, not less. I think once we understand that, every generation will be fine.
Thank you very much. We're running out of time, but if I could take the question from the gentleman, Tayo, I don't know if you could answer that, which talked about where you have unlimited funds, where would you want to invest in, or what area of tech would you? No, I don't know if you want to take it or time. Okay. Because you're an angel investor.
Fintech is, if you came into the startup industry about 5 years ago, it wasn't fintech then. It was e-commerce. That was how we we had the people like who were the popular Jumia, Konga. They were founded in that generation. So I think that fintech is in there because there's an opportunity in that space. But we'll get to the point, yeah, that we're going to go where it gets saturated. And then we found other sectors. In the developed world today, despite, I don't know, enterprise tech company, if you know how much was invested in cloud computing to give you the platform, how much was invested in technology that's actually providing the infrastructure for you to deliver fintech in the past 2-3 years because of COVID and all that. A lot of money is going into several sectors, but in our local market, in our local environment here, we're attacking what can give the easiest money, which is fintech for now. But in the next few years, health tech, in my portfolio, we have health tech, we have fintech, we have even agri-tech, we have enterprise tech. So eventually there'll be a lot of areas. Any area people see opportunity and venture capital companies can see the opportunity to make money. They'll get into it.
Okay. You want to very quickly?
Yeah, sure. So, yeah, I have two answers to that, by the way. If I was a social enterprise, social entrepreneur, right, or someone who cared a lot about society, which is what I am, right? It would be education. It's a no-brainer, 100% education, right? But if I was looking to maximize payout, right, maximize returns, it would be space, right? Because space is the new frontier, and in the next 10, 20 years, the sorts of wealth that will be created by space companies would dwarf anything else on the planet.
Thanks. If we look at questions from the online viewers, I think the summary of what I see here, first, they talk about emerging technologies and businesses. They talk about security and privacy threats. One said that considering how unstructured our informal sectors are, can we really trust our data and our source of credible information based on the level of the volume of data flowing outside the regulated economy? Then can private organizations help government in enhancing data storage? It seems the personnel or sophistication of government tech solutions cannot even handle us at the moment. So it's talking about data and data integrity and trust. I don't know if we could just one reaction to that.
Okay, talking about data integrity, data trust, it's a huge thing because there's a lot of data fraud out there actually. But looking at the informal system, I believe that, for instance, I've forgotten their name now, but I know that they went into rural areas and actually captured, because you see a list of, you see 5,000, 10,000, you see phone numbers, you see, and all of them, they are, if you scratch, and beneath them are just four people, ghost numbers. But there are some private organizations that are currently doing the hard work, the groundbreaking work, and going into, capturing all of this. So I believe it can be done. And talking about opportunities, talking about what he asked, these are areas, are sectors that are untapped and can be, a lot of value can be unlocked. So back to one of the questions he asked again, saying that where, I believe if I had funds to, I would be like niche banking, right? Close to what we are doing, like financial services for women. What are we doing about financial services for seniors? What about like
Targeted.
Yeah, targeted. Just look at a particular niche, go in, put your skin in the game, and trust me, a lot of value I believe can be captured in all of those. Yeah.
Okay. Well, we'll just take one more. I'll come to well, yes, you had a comment, sir. Or a response. Thank you very much. Let me congratulate all of you. Wonderful insights and knowledge garnered for old generation guys like myself. But I just want to, it's not a cautionary note, but also an information that's critical. One, to keep the restlessness of generation Z or Y, you must recognize that they are going to disrupt us. My 35 years of business experience employing people is that today nobody really wants to work for anybody. And so what will happen is that everybody wants to be an entrepreneur or an intrapreneur. So even those that are working for you, even while your office is closed and they're home and they're performing for you, they're also performing for themselves. I recently chaired a group of companies and there was a retreat and I discovered that 42 managers were all closet entrepreneurs. They had their businesses. So when we then eventually allowed a WhatsApp group where they could actually do business amongst themselves, we found out that they were all very happy. So when does it stop? You know, where everybody, those working for you are also working for themselves. So in reality, I think it's the end of business and companies the way we used to look at them. We're all going to be entrepreneurs. And those who are not even setting up their own businesses and working for others will be intrapreneurs. They'll be applying the entrepreneurial mindset to do things for themselves. I think that's quite important. Thank you. Thank you very much, sir. And that's the reality you're faced with. So where you have employees, you should give them the leverage to be able to do their own thing at their own time. I think at this point we need to round up. We have to round up. I'm very sorry. We'll take the question after with the participants. We want to take a 1-minute video. The next one by our sponsors before we now. Are we ready?
The task ahead of us is never easy, but with focus, preparation, and sheer will, we accept the challenge. We take the first step forward because challenges are just a part of life. The wind blows, doubts creep in, and you may lose some balance. You must keep moving forward because the balance will get easier, especially when you have the right partner like Custodian who worries about the risks.
I have found the right partner. I found Custodian. Now I'm in control every step of the way.
Custodian, exceeding expectations.
Thank you very much. I think just to do a bit of a recap of what we've done. One thing is clear, we've talked across all the issues centered, or most of the issues centered around technology, its growth. We've talked about funding, we've talked about data, we've talked about data integrity. Of course, data mining is another area that, because years ago, we felt that banks were capturing the largest volume of data. But the truth is that banks were just capturing data. What were they using the data for? So, but the use of data itself, it's an area that we have not paid attention to. We have monumental data in this country. And you'll be shocked at the way data is flowing now. If I want, people say that, oh, they want a list of all the customers of a bank. They'll get it within 5 minutes, irrespective of how much protection you put around them. So data is money, but what do you use the data for? And to what extent are you able to take advantage of the opportunities that lie there? We talked about the velocity of movement of people. It's very clear that you can't stop them. And we also talked about the role the government has through the regulatory authorities, irrespective of all the sectors, and how the government can very actively get involved with ensuring that we reduce, or we almost eliminate, you can't eliminate, but reduce what we call the brain drain, or the migration of people from one sector to the other, from one country to the other. So would be putting all these things into perspective as a chamber, and of course, using all our other respective committees to drive home the truth and the reality of what we're faced with as a country and as a people and as an economy. And all this is aimed at ensuring that every sector of our economy grows and that our people are able to develop themselves over and above where they are today. And of course, continue to review the impact of technology within our economy and of course the world at large. On that note, I want to thank all the speakers very much for coming. And I thank the audience, both here physically and online, for the patience. We've run ahead. We're probably a bit ahead of time, or sorry, behind time, but I think with technology, we'll be able to make up for it. On that note, I'd like to invite Ms. Reno to please come up and make some presentations. Oh, vote of thanks, sorry.
Thank you very much, and good morning, everybody. It's been a really great session. I'm sure everyone has taken something away from today. The debate continues, the conversations continue. On behalf of the chamber, I would like to thank all the speakers. Can we give them a great round of applause? They did an absolutely brilliant job. Very vibrant, very passionate, spoke from the heart, great experiences and stories narrated. And of course, we will continue on this trajectory with the next generation. So much to learn. A special thank you to Mr. Adetayo Bami Duro, Mr. Collins Onuegbu, Miss or Mrs. Sholakpe Akinpelu, and of course, Mr. Itop Ipe. Thank you very much for your time. Thank you very much for putting yourselves forward in terms of your experience, your knowledge, and it's an opportunity for the entire audience, both online and physically present, to tap into the audience and the speakers and really try and learn a bit more after this session. I'd also like to take our great moderator to say a big thank you to you, Mr. Shegun Akintemi. You obviously fit the bill. I love the colored socks. It obviously typifies the next generation. So quite clearly, he's done a great job in summarizing. And to the patron and council members, thank you very much for your time and for staying on even to the end of the program. Our sponsors, Africa Prudential, Custodian and Allied Insurance, and indeed Max Group. We say thank you very much. Ladies and gentlemen, thank you for your time. We've had a great session together. Those online, we also want to acknowledge your presence. Please continue the engagement with the chamber. The programs committee, we would like to say thank you to you for organizing this series, and please look out. There are many more conversations and series going around the next generations, and be participators and learn from the conversation. NBCC headquarters is where you're all sat. We have quite a number of events that we roll in within the organization. Please join. If you're not members, please join. I can just sort of point out to some of the upcoming programs. We've got the Meet the Governor of Edo State And that is usually very, I mean, the Meet the Governor series are very exciting and informative and insightful. We have the NBCC National Conference, an exhibition, which is going to be a 2-day session at Eco Hotel. And with, again, a lot of conversation around technology, fast tracking productivity, leveraging on technology. So we welcome you to ensure you participate, attend the sessions, attend the exhibitions, and check us out online. I'd finally just like to close out and welcome those who are here physically to our new building. Please use this space to host your programs, your events, social, corporate, whatever it is. And it's a great space for starters to come in and hang. Thank you very much and have a great day.
Thank you very much. The next item on our agenda is order of photographs and presentation of plaques. I'll call on the Deputy President, Mr. Ray Ateli, for the presentation. Mr. Bamiduro.
We have learned so much today, and you contributed immensely to it. And so we want to thank you on behalf of the Council of the Nigeria-British Chamber of Commerce. Thank you very much.
Next, we have Mr. Etop Ipe.
Yes, indeed, without your contribution, this event wouldn't have been as enriched as it's been. So thank you very much, Mr. Etop, and we hope that you honor us again with your presence.
Next, we have Ms. Sholakbe Akinpelu.
Use that.
It's fine. It's fine.
Thank you very much, Sholakbe, for making this a memorable event. I'm sure that all who are present here are already thinking about their entrepreneurial journey after this event. So thank you so much for making this a success.
Thank you, sir. Thank you very much. We have Mr. Collins.
Yes. There comes a time when a man should be upgraded from Mr. to Chief, whether the community wanted it or not. Thank you very much, Collins, for making this a great event for us. We have learned from the numerous examples that you shared with us, as well as the interest you took in the up and coming entrepreneurs by being an angel investor. You have enriched the ecosystem. Thank you so much, and we hope to see you again.
Thank you. And the last but not the least, our own Mr. Shegun Akintemi.
What can I say about Mr. Akintemi? He is indeed one of our resource persons in the chamber. We don't have to go too far to get an expert. If we call across and he's there with us. Thank you so much for all you have done today and all that you have continued to do to support our chamber. Thank you.
We'll go straight to the order of photographs. Please, can we have
the Deputy President and panelists. The Deputy President and panelists, please. Moderator. Moderator, Deputy President and moderator. Okay. Oh, sorry, the council member, sorry. Prince Dapo Adelego. Okay, can representatives from Custodian Allied Insurance, Max NG, African Prudential get ready? Can you come out, please? Representatives from Custodian Allied Insurance, Max NG, African Prudential, our sponsors. Can you get ready, please? Yeah, just get ready. Okay, cool. Can we have African Prudential? Thank you. After African Prudential, Max NG. Max Asifu. Can the ESCO members get ready? Can the members of the British Business Group get ready, please? British Business Group. Members of the British Business Group. Esco. Okay. Thank you very much, ma'am. Thank you very much. And the programs committee, get ready. Members of the programs committee, get ready, please. Next, programs committee. Can all special guests, all special invited guests, can you get ready, please? Can we have a representative from Data Flex? Thank you very much. So thank you very much. Once again, thank you all for attending this event. We are very, please, lunch is ready. You can have your lunch just outside the door. Thank you very much.